institutional investors are looking to the special treasury bills as trades for the 3-month special papers were executed at 8%. Akpevwe Oputu, fixed income dealer at Access Bank, joins me for a midweek review of the fixed income and FX markets. Akpevwe, thank you for joining us today. Let's get right to it. We saw bullish momentum at the bond market yesterday, I think particularly at the long end of the curve. But bring us up to speed on trading so far today. Just give us a brief midweek review.
All right. Good afternoon, Esther. Thank you for having us on the show. So at the bond market, we've continued to see demand on the medium and the long-term securities. And this demand has spanned from the new auction calendar that was released. So the 2045, which was a long-tenured bond security that was on offer at the last auction, is not going to be on auction this time around on the 23rd of June. So it's been changed to the 2050 now. And this has caused a lot of demand in the market because market players are trying to cover the positions they have on the 2045 security. So we've seen yields at the benchmark bond compressed by about 4 basis points this week, now trading around 14% and 14.08%, coming from 14.2% levels. So we've actually seen a lot of demand on the 49s, the 50s this time around. On the treasury bill space, the market has been relatively quiet, despite the over maturity that came into the system on Tuesday. About 55 billion matured into the system. We haven't seen a lot of activity on that end. We've just seen a few demands on the long end of the NCB curve, where the bills are currently trading around 9.4% levels. Not forgetting that the stop rate came down from 9.75% at the last auction to close at 9.65%. So we've seen a lot of demand hover around the long end of the curve on the NCB space.
Okay, now very briefly, this is a time where we're seeing investors, wealth managers rebalancing their portfolios. What is your outlook for the month, especially for yields? We're seeing this steady climb in yields.
Okay, so we've seen the NCB has been relatively stable now around the 9.75%, 9.65% at the auction. So we've seen a lot of demand in that space, despite the 16 billion that was on the auction at the last Wednesday NCB auction. We saw demand of about 120 billion, and this was actually sold by the DMO. So we've seen a lot of buying around the long end of the curve. Also on the bond space, we've seen a lot of demand as well on the 45 and on the 50s, where the 45 is currently trading at a discount of about 14%, and that's the price is around 71 naira. So that's actually good yields for portfolio investors. So because you're going to be paying much more lower than the purchase price of 100 naira for the premium. So.
Okay, now quickly for the FX market, what can you tell us in terms of, I mean, we've seen some recent adjustments, the new NAFEX rates, and of course the movement that we're seeing at the parallel market. But what is your forecast for trading range for the Naira for the rest of the week?
So there's still paucity of funds in the FX market. So we still see trades being consummated around 410 and 411 levels. The central bank has actually been intervening in the market. We expect them to intervene today because they've come into the market on Mondays and Wednesdays to intervene for the internationals, for the SME and the invisible. So we still expect that to continue, but there's still paucity of funds at that market. So rates are going to continue to hover around the 410 and 411 levels currently.